What's up, guys? Welcome back to DCA. So what we're going to do in this video is take a look at a unique metric. We're going to look at the supply distribution of Bitcoin over time. So what this metric is doing is showing us that at any given point in time and at any given price, so as we move along from month to month, we can see how many Bitcoin are still sitting at that level. So in other words, you can see here back in June of 2014. So right here, this is June of 2014. We're looking at monthly candles here of the Bitcoin price over time. So in June of 2014, we can see that there are still around 200,000 Bitcoin sitting at that level. So you can see this is 250,000 or a quarter million. All right. Right at this level. So in June at a price of $600, there are 200,000 Bitcoin still sitting there. And what this chart kind of does for us, it shows us how markets sort of react to different events that occur throughout the course of a market cycle. All right, so we're looking at a historical relic almost of what people have done in various types of situations here. So you can see several things. So let's start with just a few things back in this 2014 cycle, because I think there are a few key things defined here. So first of all, you see that there are a lot of coins sitting. There's a relative large number of coins sitting right here in December of 2013. All right. So when the price was from around 1,100 all the way down to around $435. So what this tells us is that, this shows that sort of buy the dip mentality. And to a degree, it's not a bad mentality to have. You never want to be buying at all-time highs. That's always a terrible idea. Almost always a terrible idea to be buying at an all-time high. So, a lot of people though, bought anywhere between this, let's say $1,000 all the way down to this $400 level. And that's why you're seeing a lot of coins sitting at this level. But notice the price did not continue to go higher from here in the short term. In fact, it trended down from December of 2013 all the way pretty much until August of 2015. So you basically had a full-on year and a year and 2/3 of downward price action from here. All right, so these are people that bought the dip, but the dip kept on dipping for quite a while. Now you'll see another location of a large number of coins, and that's in June of 2014. And in June of 2014, what we see is the fact that we have nearly 200,000 coins, over 200,000 coins sitting at this June 2014 price level. And so that's going to be right at around $600. And that's because in the prior month, we had this big candle to the upside. And a lot of people then wanted to FOMO in thinking that the market was back on. And, not for, it wasn't a terrible thought process because you're not buying at a high, you're not buying at an all-time high, so it's not a terrible time to be buying. And, we just saw in this prior move where we had a big move to the upside, followed by a drop, followed by another big compulsive move to the upside. So a lot of people FOMO'd in right here in June of 2014, thinking that this was the next FOMO to the upside. All right. Now, what's interesting is you see a lot of coins then, if we just come to 2017, so you sort of have a very low number of coins sitting anywhere from the mid or, the late 2014, all of 2015, 2016, and then the early part of 2017. There's not many coins sitting there. So these people likely sold as we were moving into these more bullish stages of the market that bought down here. Anywhere from, $180 all the way up to $400. So what we see though is a lot of coins start to accumulate in these zones. All right. We start to see, nearly 200,000, 200,000, 200,000, 250, 250. So there's, millions of coins sitting in this range here that people still own that bought anywhere between, we could say right here, anywhere between $5,000 up to around $20,000. There's still a lot of coins sitting there. So people that bought in those ranges either A, lost their coins, lost their keys, whatever it may be, or B, believe in the long-term potential of Bitcoin and are still just sitting on it. I imagine that it's probably a mix of both, although it's likely more so that they're still just sitting on their coins, because people that bought up here near 20K, they're only at maximum sitting on a 3x gain over that time period. All right. So I want to show you one big level of risk that we still see in the Bitcoin market. And that's the fact that we have nearly 500,000 coins sitting right here at this December of 2018 level. So at the December 2018 level, we have 500,000 coins. Someone bought a ton of coins at that level and they've just sat on them. So they're sitting on coins that cost them, only around $3,032.50. So $3,250 coins, there's nearly 500,000 of them sitting still down at this bottom. And this shows, this is the kind of savvy investor that you want to think of yourself as. Someone who sees an opportunity like this massive capitulation, and can have the fortitude to step in and make a large purchase, even though everything looks doom and gloom. So this is kind of what we talk about on this channel. If you're using something like the DCA index risk model, for instance, when we got down at this level, this was showing you that this is one of the premier times to buy that there's ever been. The only other time that even rivals this is right here in January of 2015, when we got down to around $150, just north of $150. So that was the same type of buying opportunity that this December of 2018, the December of 2018 move afforded you. When we got down to around $3,500, it was quite simply, the kind of position where you're never going to very likely get a chance like that again. Or it's the kind of thing that happens very quickly, and it happens only once in, every 5 years or so. So that was that kind of opportunity. Then again, the COVID capitulation event, being a black swan event, sort of presented that again. You sort of had one more of those opportunities. But notice, not that many coins were bought during COVID. And I think that was because of the magnitude of the event and what was going on. People were more worried around the COVID event than they were here. You had more conviction in Bitcoin. Whereas when the COVID event occurred, people didn't know what's going on. It's sort of an unprecedented event in terms of, people that are alive now have never seen a global lockdown because of a pandemic. So people didn't know how to approach the event quite as well as they did, at least some individuals back here in December of 2018. So that brings us to where we're sitting at now. And it's interesting just to see that we have a ton of individuals holding the asset anywhere between this $20,000 level up to the $60,000 level. So you can see all through January, February, basically all the way through May, we just have a ton of coins. So you can see that at each level, it's over 500,000 Bitcoin. So we have, over 1 million. So just over 10% of the Bitcoin supply, 10 to 15% of the Bitcoin supply is being held from individuals who bought back in this bull run. So it's very likely that these individuals are going to become individuals who are going to hold into the next big move to the upside whenever that comes. And this is what we see. We see that new entrants into the market buy in these zones. They buy when the price is going up. Then the people who have been holding from the last cycle, so in this case, this would be the 2018 cycle, the guys who bought back here, maybe bought near the top, a lot of them are new people into the market, they start to sell when you start getting into new all-time highs. And we've showed this many times on this channel, where the smart money is sort of getting out of the market as you're approaching and going into new all-time highs, whereas the new entrants into the market, and we've all been that guy before, they are buying, sort of FOMOing into the market. So it just shows a sort of, a thought process and how you should want to approach the market. You want to be the kind of person who's acquiring at lower risk levels and then distributing into higher risk levels. So a lot of these people are newer into the market, and that's fine. It's fine to be these people. And it's good to see that they're holding, because that means that those people that bought at these higher levels at 20K, 30K, 40K, 50K, they have decided now that, regardless of what happens, I'm going to be a holder. I'm going to hold on to my coins, and then I'll start distributing, when we're moving above 70K into 80K, 90K, etc. And it's sort of just the way that these markets go. And we've, seen it play out like this in every single market cycle. Long-term holders start selling right when we get to a new all-time high. So we saw the long-term holders start selling right here in May. Short-term holders are then buying. You see the long-term holder supply dropping when we're moving above these all-time high levels. So like we said here in May into December, and the short-term holders, their levels are increasing. So they're buying into this compulsive move, whereas long-term holders are distributing. All right. So what we see now then in the more recent months is, again, we have a lot of coins have been accumulated in this zone, again, from very likely what we saw back here in June. There was a big move to the upside that we saw right here in October. And then you see a lot of people starting to hold coins right in this 2022 section. And these are people that think that, okay, well, we went up, took a little break, went up. Now we're taking a little break, and now we might go up again. So they very well could end up being right. I tend to think that based on the macro concerns in the market, that there are simply headwinds ahead. But, it's not a bad plan. As long as you're not buying, you're not someone who's buying at the very top. You're someone who's buying at discounts. Because even if it's not a discount at the moment, even if you bought it 45K, let's say, and we're sitting down south of 40K. If your horizon is long enough, it's very likely to turn out to the best for you. It's very likely that it's going to be something where, you're going to be happy that you held rather than capitulating and then trying to FOMO back in when we are above that 70K level. So this is showing how you should be approaching the market as a more savvy investor, someone who's buying when the price is at a discount and then distributing when you're moving above those all-time highs. And that's sort of exactly what we're seeing play out in these charts, and we're seeing it play out again right now. It just sort of shows the psychology of an investor in a market cycle. And I think it's definitely something worth continuing to watch, and it's worth taking to heart. It's worth, understanding how the markets work and how you can yourself become a better investor by, understanding that the best times to accumulate, if you're patient, usually do present themselves. FOMOing in, like you hear a lot of people always saying to do, is, quite frankly, it's silly. And it's why most people don't make money in these markets. It's because they do FOMO in rather than being patient. Because we see that if you're willing to just, sit back and be patient and wait, there usually are excellent opportunities, especially when we're coming off of a place where, we've recently made a new all-time high relatively. November is a relative, in terms of the grand scheme of things, it is relatively recent to make a new all-time high. So there will be opportunities again, very likely. I don't know how low the price will go, but it's why we suggest dollar cost averaging. If you're buying more as you go lower, you're very likely to be rewarded in the long run. And it's why you should, you want to be buying less when we're at higher prices. And then relatively, you're buying more when we do go to lower prices. So for instance, if we did go to 30K, 20K, I'm not saying we will, but there's always that potential. And if we do, those are very likely going to be excellent opportunities to accumulate more of the asset. And that goes for any asset. All right. Ultimately, Bitcoin's going to be, in general, offering you less risk, less downside risk than many other assets, but it may not have the same type of upside risk. So you yourself as an investor need to decide whether, you're willing to accept the relative increased risk of buying altcoins. And in addition to that, the fact that we've seen that many altcoins don't recover from cycle to cycle. Now, some have, like Ethereum has recovered, for instance. Chainlink, went to new all-time highs in the bear market, things like that. They have continued to press on from cycle to cycle, but many of the top altcoins back here in 2018 never recovered, quite frankly. So it's these kind of things that you need to consider. And it's why we constantly make videos like this on this channel, because they're ultimately the things that are going to make you a wiser and more savvy, a more profitable investor. So that's it for this one, guys. If you guys like this type of content, hit like and subscribe. You could head over to the Discord channel where we do a lot of discussion of the macro level picture. We talk a lot about a lot of things like this, and we'd love to have you. So until next time, as usual, see you.